There you go.
Hello traders, Cousin Vinny coming to you from theclosingprint.com, March 13th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed lower in the US, while the FTSE and the Bombay Stock Exchange managed a rally, showing some strength. While growth stocks took a hit, most of them lower, Berkshire Hathaway did manage a positive close, with 15 of our indicators bearish, 3 neutral, and 2 bullish. It's telling us to be cautious again this week. We're waiting for FOMC on Wednesday and OPEX on Friday. With that in mind, we do have a mixed heat map with pharmaceuticals leading last week, along with crude oil related names, utilities. Some of the builders started to move a bit, metals and mining, real estate, and the maritime shippers, container shippers, managed some strength. Small cap sectors, 7 of 9 are bearish, with small cap energy and small cap industrials bullish for the week. In addition, most international indices moved lower, with the exception of Brazil, Mexico, South America countries. Most are neutral to bearish. Overall, there are quite a few stocks that are moving higher to end the week, showing relative strength, with several dozen stocks from the IBD 50, IBD scans, and relative strength line at new highs scans, with many of them related to crude oil, the oil and gas sector, pharmaceuticals, and metals and mining group this week. Those setups could follow through. In addition, as we start the week, we have Bukowski's signal bearish at 3.4%. That's an extreme. It usually reverses soon thereafter. With FOMC on Wednesday and OPEX on Friday, there's a possibility that could spur a rally. With those dates passing, with the markets trading progressively weaker throughout the Friday session, we were seeing some of the heaviest put buying and call selling in the last 30 days or so. Bottom line, S&P 500 support held fairly well. We do have a level below where we closed at 4,100, 410 on the SPY with the Qs at 320. Those are key supports. Resistance at 4,300, 430 for the SPY, and the Qs with resistance at 340, the vol trigger at 43.95, and zero gamma at 44.27. At a minimum, we need to get above 4,300 this week to even consider a rally towards zero gamma at 44.27. The S&P 500 weekly chart shows some Fibonacci levels. We're currently at 50%, with a possibility of heading for that lower trend line and the moving averages before bouncing into OPEX and the FOMC meeting. Once that's out of the way, there's a possibility a lot of that institutional hedging will unwind. RSI down there near 30, with 2 distribution weeks this month, with MACD lower and stochastics trying to recycle and starting to turn, as markets start off the week decidedly bearish, along with 15 of our indicators. The Nasdaq also pulled back to Fibonacci levels last week, with 382 from the March 2020 lows up to recent highs, residing right below 320, a major support level on the Qs, with a confluence zone from this breakout from the February 2020 high that we pushed through in May-June of 2020 up to the recent highs. That gives us a 50% 618 Fibonacci level confluence with 382 or the 320 level on the Qs. RSI is near 30, and we're looking for oscillators to turn higher into April seasonality, one of the strongest months of the year. IWM weekly showing some similar support levels at 382, with oscillators still moving lower, looking for a turn in the short term. With all three indices moving lower and stretched to the downside, we did close with a green VIX signal, one of only two bullish signals for the week, which would indicate if it does stay green, higher lows and higher highs projected on the 60-minute time frame for the S&P 500. With that weakness in the context of slowing economic growth, geopolitics, and a tighter monetary policy, that spurred demand for protection, while simultaneously the demand for protection is concentrated in options with very little time left to expiry this Friday, with 30% of total S&P 500 delta expiring on this OPEX, currently below prices where we closed. The market's failure to move lower results in delta decay. In light of these dynamics, Friday, a lot of you were commenting about the fact that VIX was staying relatively low as the markets were moving lower at the same time. That's telling us the markets are well hedged, and it would take more demand to keep the VIX elevated. An additional bullish indicator for the markets was the put-call ratio, which did manage a little bit higher close. However, we're looking for this level to drop as participants seem to be well hedged already, given what we saw with VIX on Friday. So if this starts to move lower, that would be another positive catalyst, along with Charm and Vanna going into this OPEX, helping to create a tailwind for equities this week. That is, barring any unforeseen catalyst that could hit the markets on the geopolitical or economic front to start the week. Finally, we need to see breadth improving. The number of stocks trading above their 50-day and the number of stocks trading above their 200-day are at washout levels near 25%. In other words, 75% of stocks are trading below their 50-day moving average, with the number of stocks trading above their 200-day moving average only 37%, so 63% are below, and something that needs to improve this week. It should be no surprise from last week that metals and mining stocks continued to show improvement. Energy, oil equipment, exploration and production stocks looked good. Towards the end of the week, financials started to look a little better, along with pharmaceuticals seeing strength in Bristol Myers, Lilly, Merck, AbbVie, among others, along with building and construction, real estate, and REITs. We also saw some strength in utilities. International indices were mixed, with weakness in China, while the South American countries managed to stay bullish to slightly neutral. With this in mind, we're looking for these sectors to continue this week, especially the oil and gas equipment, crude oil related names, oil and gas exploration. The fertilizer companies look good. Utilities are above the 9, 21, and 50-day moving averages, with some focus in pharmaceutical stocks to end the week. So we'll look for these groups to continue to move higher into FOMC on Wednesday and OPEX on Friday. Once again, these stocks showed up on the IBD scans, as well as stocks showing relative strength at new highs. In the scans, we looked at stocks that were showing stochastics oversold, or stocks that had both oversold stochastics and RSI improving, noted with asterisks going into this week. Starting off with the IBD 50, we saw strength in maritime, container bulk shippers, pharmaceuticals highlighted by Regeneron, Bristol Myers, Lilly, Merck, and Pfizer. We also saw strength in alternative energy stocks like Solar Edge, fertilizer stocks like LXU, LSB Industries moved higher, with Zim Integrated Shipping and Matson following through, Both are on the IBD 50 this week, with focus on these top 10 stocks that showed relative strength on Friday. We're looking for a follow-through this week. Zim, for example, managed a follow-through. We did close off the highs of the day, but in the upper half of the daily range. RSI is still trending higher. We're trading in an area of very little overhead supply, 52-week highs, with volume showing institutions have been picking up shares, and MACD crossing with stochastics rising. Look for Zim Integrated to follow through this week. Matson, also from the bulk container maritime shipping industry group, sitting on top of the 9 EMA. Strength here as well, looking for a follow through as RSI rises, trading in an area of very little overhead supply. Volume showing institutions were picking up shares about 3 weeks ago into the peak in price action. We faded back to the 9 EMA, consolidated recent gains, looking for a follow through this week as MACD potentially turns, and stochastics, looking for stochastics to rise to start Monday trading. Fertilizer stocks were also very strong. Note the muscle in RSI, that's telling you strength of trend. Many people will look at this as overbought. Whenever it stays above 70, that's telling you the trend is strengthening, not weakening. We did make a higher high with RSI making a lower high, so that's something to consider as well. We would like to see strength return to these names this week. We'll also watch for alternative energy stocks like Solar Edge, Sun Power, First Solar, Canadian Solar to continue higher, along with Enphase. As Sun Power consolidates the recent gains, could come back to the 9 EMA before transitioning. Note the moving averages have gone from markdown, where prices were below the 921 and 50 day, to flat, showing accumulation, phase 1, starting phase 2, markup as institutions let the shares get marked higher, coincident with the 921 and 50 day turning up and to the right over the next several weeks and possibly into year end. No surprise here as well. Regeneron on the IBD 50. Pharmaceuticals showed strength towards the end of the week, with Bristol Myers, a position from several weeks ago, trending above the 921 and 50 day, showing relative strength, looking for these to follow through. As we saw with Pfizer as well, moving above the 921 day, again breaking this markdown. A short little base, looking for a follow through. This could get rejected at the 50 day, but we're watching for a continuation with RSI above 50 and rising. Looking for strength and volume to indicate institutions are picking up shares. MACD is above its signal line, trending, and stochastics is rising. In addition, these are stocks from the IBD relative strength line at new high, with oil and gas stocks populating the majority of the list. We had Baker Hughes, Canadian Natural. I believe Susie was trading this one on Friday, looking for a follow through, along with NFG, National Fuel and Gas, and Occidental Petroleum. PBF, highlighted in Wednesday's blog post, where we talked about refiners in the U.S. seeing volume, looking for a continuation in those companies needed to process fuel oil here in the U.S. We also saw strength in Nucor Steel, Cleveland Cliffs, Steel Dynamics, and U.S. Steel, among others. Looking for these to follow through this week as well, as U.S. Steel shows RSI muscle, strength of trend, 921 50 day crossing up through the 200 day over the last several weeks. The 50 day last week, volume showing institutions have been picking up shares. Stochastics and MACD both pointing to a bullish follow through on Monday and Tuesday. Additional stocks that showed relative strength improving, with RSI moving through 50 and trending higher. From the gold, metals and mining group, we had agriculture stocks like Agro. Note these are VWAP charts. The stocks that closed above VWAP, with VWAP bullish, are of interest. Many of the oil and gas names like Antero Resources, Baker Hughes, Canadian Natural also showing up, with Eco Petro and Chevron, EQT, among others. Pharmaceutical and biotech stocks like Kala, K-A-L-A, cheap, but looking for a follow-through, along with U.S. Silica from the fracking industry group. With all of these stocks showing relative strength, RSI, strength of trend, 921 50-day above the 200-day, continuing higher, and volume telling us that institutions are picking up shares. If your stocks look like this, and you have MACD above its signal line with high relative volume and price above the 921 and 50-day, we'll look for these to continue to move higher this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, March the 13th, 2022. With so many indicators bearish this week, we'll be a lot more cautious than we have been over the last 2 months. We could see a capitulation move down to support or more short covering rallies that get sold this week. So look for strength to persist in the names that were strong over the last few weeks as we do the same during the live broadcast. I'll send out a watch list later tonight around 12 midnight on the East Coast, 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, take care, have a great evening, and go out and enjoy the day. It's beautiful here in Myrtle Beach. Take care. We'll talk to you in the morning.